All right, hey traders, this is Christian from Tribeca Trade Group, and this is your quick end of day recap for Friday the 28th. So one more day before the end of the year. I'm just kind of doing this video just to kind of just summarize what we saw today, what we saw this week with price action, and talk a little bit about the year 2019, as I will be traveling a bit this weekend. So, a lot to talk about for next week, which we'll be going over in the trading room, kind of formalizing a trading plan for the year, which have already kind of put in place and doing right now, and kind of responding to how the market is changing. So, let me start with today's price action, and we'll talk a few minutes about that, and then we'll move to kind of looking forward to next year. We'll talk about some of the price action for the week, just to look to see what happened, what transpired for the week. Basically back, we were just talking about this in the trading room, but basically back to where we were, complete round trip in the market. So let me bring up the daily chart, and then we'll talk about today's price action. But just to kind of review, we're basically we're right back to where we were a week ago, and we had this oversold bounce, right? So I'm going to leave it there for just a second, but this big oversold bounce, we were way oversold, on Christmas Eve, and we basically got the bounce that we're looking for. So now it's going to be, I think all along it was been in the cards for a bounce. I honestly thought maybe it would come. I did not think that we were going to get such a sell-off on Christmas Eve. But that got us even more oversold, and further we had the bounce. What actually outperformed this week? So SPY was up 20 basis points for the week. Small caps actually outperformed, and transports outperformed. So let's go over to the IWM chart just to see if we can kind of come up with some levels. I'll talk about the 1 hour charts. I thought those were pretty good to watch. You could see not the best looking bar for the close. So I think you just kind of have to give it a little bit more time. Again, great bounce, great trading bounce, a lot of activity this week, a lot of scalping, a lot of short-term trades that we saw on the tape. So we'll get into all that. Let's start with, so what do I want to start with? I guess on the 1 hour chart, some good levels. We got it. We did end up getting into value for the week, but we came back and we checked back. Now this is this week's value area. We've got a next one, so we've got a whole new level to watch. We're probably going to open up. Well, we'll see where we open up. For next week, but the 133.55 will be the level to watch for the week. Similarly, if you go, I'll go over to SPY next. SPY, notice we got a couple bars into value, and we're basically right back. Today was kind of a round trip day, flat for the day. The next week, it's going to be basically the bottom of value for this week is going to be this next week's top of value. So basically very similar levels, 247, close to 248 for SPY. And then lastly, Qs. Same thing, right? The bottom of value is going to be next week's top of value. So again, that 153 level, I think will be something to watch, and we'll see. If we fall into value for the week, then if you're playing stuff to the long side, then maybe you want to be trimming positions or watch the price action. If that happens, then I really don't want to mess with this market. Unless we happen to get all the way down to the bottom of value and do some type of a retest. Then I think that'll be a good trading opportunity. But if we happen to open up above value, then this red bar is going to be your support. And again, keeping things as simple as possible and not overthinking things. I think there's too many opinions on Twitter right now. Everybody is I think this week, if you were on Twitter at all, just kind of stupidly, I don't want to say vicious, but people are so opinionated. Bull market, it's almost like politics. Bull market, bear market. I don't really care. I just care if I make money, and I'm providing good setups to traders in the room. I mean, there's gonna if this happens to fall, there'll be opportunities on the short side again. If we fall into value, and if we start to break higher again, there'll be opportunities on the long side. I'm always a little bit skewed to the long side because markets rise over time, right? We know that. Markets don't fall over time. There's definitely times where they do fall, but generally the market rises over time. So yeah, I mean, I'm always a little bit skewed, in the camp of looking for more long setups, but when there's volatile markets, there's opportunities to be made. So let me go back. So that's for next week, and we'll go over all that. This is Friday, so this is just kind of a recap. So one of the things that we said today, right? There was all these rumors about how much the portfolio rebalancing. This happens every year. Portfolio rebalancing at the end of the month, at the end of the year. It gets a little bit dicey the last week of the year because it is what it is. There's a lot of market participants that are away on vacation. When I come into New York, my office is on Wall Street. I've been working on Wall Street for a long time now, for years, but it's about half the people that I normally see. I actually really like this time of year because in New York City because it's not crowded. You could get to where you want to get to. Besides the tourists, you have to weave in and out of with the selfies. But besides that, it's really easy. You don't have to stand on a lot of lines in the morning if you want, to get your breakfast and so forth. But anyway, that's a different story. But it's going to be prices are going to be when there's that big order flows. So what's different, right, is guys who have portfolio managers, or I should say pensions who have these year-end trades, they're going to do these big year-end trades no matter who's in the office and who's not in the office, right? So that's why, if guys from the hedge funds, long-only guys, if some of those guys are on vacation and not trading, that's going to make the moves more severe, which is basically what we saw. So again, those guys, have to the guys who are doing the pension allocating and changing up their models because the model says to, that's going to just not disrupt the market, but that's really going to move the market the last week of the year, and that's kind of what we saw the last couple days. But one of the things that I said in the room today was, I said this at 1 o'clock. I said I'm already positioned long, so I'm not going to make any major adjustments. If looking for an end of the day possible ramp, today's, I mentioned a couple calls, which I think all went up to like $1.20, which I think worked pretty well. And I call that would be a lot of, calls that expired today. But obviously have to be comfortable with losing the 35 cents. It's kind of what the risk reward setups that we look for. Do I think that we get another ramp? I said I would be pleasantly surprised. But right? And I'm not faulting CNBC, but if CNBC is talking about a big trade, it is what it is, right? Usually when CNBC talks about it, the trade is over with. It's not ahead of the time. I don't think I've ever seen in my Wall Street career, going back to prior to the year 2000, I don't think I've ever seen CNBC be ahead of the curve on on anything. I'm sorry. They're a news publication, right? They're entertainment, but they're not going to tell you what a trade is. So I was a doubter that it could happen. What we saw yesterday was what we could happen, would happen. But by all means, we did see some of that big ramp trade, and we basically went to yesterday's highs. And then there was some selling going on. So the option activity was pretty interesting. I just wanted to show before I get into this, because I always skip around. The performance I talked about, the small caps outperforming a little bit. Actually, the semis and retail names, consumer discretionary outperformed a little bit. Utilities, an interesting, Chinese internet's also underperformed consumer staples. So utilities, so some of the safety areas really underperformed. A lot of those got hit very hard on the day before Christmas on that shortened session. XLU is down 3% for the week. And then you could see kind of a mixed bag. Europe was weak. It rebounded today. But look at the Greek ETF, Portugal, Norway, all down over 4%. Nice to see Europe rebound. I talked about that in yesterday's video. So, good price action there, and closed very nicely today. But yeah, going back to today's price action, again, very whippy. So just switching gears a little bit, I want to talk about 2019. Before I do that, let's look at the VIX. This video is about 9 minutes long. I don't want to have it much longer than 15 minutes, so we'll try to wrap things up here and the next 5. But just looking for clues in volatility, and not only clues, but also just to tell you what kind of environment we're in right now. So the VIX closed at 28, definitely lower than where we were. It did lose the 5 period moving average, which I think is good. I think the price needed to kind of get duck back below under here. It's going to retest this 25 level, but baby steps. It's good to see the volatility come off here. We had that big day on 12/21, or no, this is 12/24. Excuse me. Yeah, the day before Christmas, and then we had this big inside day where we rallied. And since then, volatility has been coming out a little bit. Let's just turn over to the VXN. Remember, the VIX is just for the S&P, so it's not going to tell you what the volatility is. Notice that the VXN, you kind of have a floating hammer there, so that one did not lose the 5 period moving average, which is the yellow line. RVX, which is for Russell's small caps, for basically IWM. That looks a little bit similar to the VIX. It lost the 5 period moving average. Maybe it will come back here and retest. Last one is VVIX, which is, notice this came off pretty hard. This is the volatility of the VIX itself. So red bars every day after 12/24. So that one looks a little bit more convincing. But that being said, how am I making adjustments, and kind of some things, some lessons or some takeaways. And by the way, this video is for information purposes only, not giving out any advice. But some lessons, I think, or some adjustments that I'm making or that I've made with the volatility. Going through those VIX charts, we're still in a little bit higher than normal volatility threshold. By the way, over time, the average volatility, this is back, I think last year was really the abnormal year where the VIX was under 15. Really, the VIX historically, is in the upper teens, right? So we're a little bit higher than normal, and keep in mind last year we were much lower than the average. But what I do in this sense is I trade less options, and I trade more cash. So, why do I do that? There's a couple reasons, and I posted this earlier in the week on my Twitter feed, but the things are just a little bit too volatile for options. It's tough to get out of options. The market makers do widen the spreads when there's more volatility. So it's really tough. The spreads, and even in liquid names like Amazon, Google, even in the Qs and SPY, I've seen it a couple times where the difference between the bid and the ask is wider than normal. So you're costing yourself more. There's extrinsic and intrinsic costs, but you're costing yourself more with a more liquid options market right now. Also, it's really tough unless you're watching, unless you're only trading one position and you're watching it like a hawk. It is very difficult. If you miss, the market starts to turn, as we saw, a couple different directions today. You get up, you go get lunch, you take a break for 5 minutes, and your option premium you could have had a huge gain, and the gain could turn into a huge loss in the matter of minutes. So if you're used to trading options, I know a lot of the traders that are in my room, trade options, but I think moving a little bit more to stock, you're still going to get plenty of volatility and a good bang for your buck with stock. All right, so I'll bring up some of today's order flow, and we'll talk about this big Qs. Oh, so by the way, so that's an adjustment to be made, is to trade more stock. I mean, I could tell you I've traded more stock the last couple weeks than I did for the last couple years. And I think that'll be my plan going forward. You could also use a combination. Today I traded Corvo, and I kind of did, the first trade that I did, which I kind of chased a little bit of option flow in the beginning of the day. Nice size Corvo trade today, which got me into, I haven't really been following option activity that much lately, unless it's a really big order. So today's Corvo Corvo order was $1 million in premium. That's sizable, right? I mean, the majority of the orders that we've been seeing the last couple days are weekly stuff, right? It's really momentum. Guys are looking for short-term momentum, and you got it this week. So the other order, like if you're following some of the other order flow that we saw, that is basically was for next week's option expiration. This is really all short-term stuff. This one, it's still short term. It's February, but it's a little bit further. So, I traded as soon as we saw this order go up in the beginning of the day. I bought stock. Unfortunately, that was right around kind of the high of the morning. And then once we dipped, I kind of scaled into some options. Made some money on the options, scaled out of it, and then scaled out of the stock at the end of the day. So I don't hold that position anymore. I don't love the chart. That's why I decided not to do that. Just because there's a rhyme and reason. But you could do that. You could take a smaller option position coupled with the stock position, right? I mean, this thing bounced from the lows. Could it get back to the 50? Sure, but I don't really see a crazy signal in here for Corvo. Another trade that I saw at the end of the day, which I thought was particularly interesting, because the application software names I think are starting to look better. Application enterprise software names. This chart again, I don't love, but it's got some support, and as long as you have a support level, you don't have to be that opinionated, and you don't have to be, catch every move, and be on top of every move every second. But NTNX, interesting what they did here. This was marked as a spread, but basically what they did was unwind January calls, 52.5 calls, which were up here. They sold them. I don't know why they would sell them for 5 cents, but it is what it is. And then they went into some April 40 calls, right? So that's 3,600 of that. Look at the size of this, $2.2 million. So the other thing to notice is the implied volatility of the calls. It's 64%. So what happens? And I think a lot of people don't go over this. Now the video's I'm going longer than expected, but that's okay. People don't go over this when they talk about options, but if NTNX either stays here or happens to go lower in the next week, this option position, you will lose so quickly on this option position, your head will spin. Now, if by chance NTNX doesn't do anything on my stock position, I'm fine. It's not really going to. I'm not going to lose anything by me not being right that it goes right up to the upside. So anyway, so I'm in this for stock. Just to go over a couple other charts that I really like. I'm still in team. I'm looking to take a target at 90. Got pretty close to that. Maybe I'm being a little bit greedy, but again, in stock with this one. Workday, which I got into yesterday. I managed to get at this right at I got lucky with this one at the high of the day. I also got out of my Qs position today, which I've been holding, for about a week or so. So completely out of Qs. So today was a great day to kind of get out of positions and to or switch and transition into a little bit more stock, which I think in this environment is a little bit better. Again, as long as you're being super disciplined and following your stops. I think that's helpful. Also, one order that I thought was another order that was notable. Look at the Qs puts that they did today. This was right around the turn. So if we look at the Qs, and only if we look at the most aggressive trades of the day. So if we look at these, only the sweeps. Look at what they were doing today, and this was in the March 29 puts. Over and over and over, they were hitting these puts. They started, I want to say, probably right on this. It's going to be tough for me to kind of match this up quickly because the video is already 19 minutes, but it was around, I would say, here that we started to see them pile in. So right after 3 o'clock, you could see some of the prints. This one was at 315, 4,000 of those swept. And every time they came and added, they were adding at higher prices. This one was at 740. I have to hit the plus arrow to see more. So I'm looking for, again, that same one. Here's another one. Boom, boom. They ended up trading for these. They ended up trading, 22,000 of these. So let's just say that the average price is $7. 22,000. That's about $15 million of premium. 15, 1-5. It's a lot of premium. So who knows what that is? It could be a hedge for somebody's portfolio, but they were aggressively buying those right on the turn of the market today. So very interesting. Again, not trying to scare anybody with that order, with those puts. Don't know what in the context of somebody's portfolio that they're using the puts for, but it kind of tells you somebody's a little bit worried about volatility for the next month or so. Actually, couple months. And again, talking about the order flow, most of what we're seeing, the NTNX order was a little bit further out, but most of what we're seeing, again today, Twilio next week stuff, really short term, super short term stuff. You know, today a little, some things mixed in a little bit further, but kind of have to keep that in the back of your mind that maybe for the if you're going to read into the order flow, it was people looking for a short-term bounce, not looking for a trend change. All right, so the trend is still down. All right, so that's it. It's a little bit longer. I know I wanted to keep the video shorter, but a lot of stuff to go over. Again, don't have to figure out this market. There's going to be plenty of moves. And I think for me, using more stock versus options while the VIX is above 25, is something that I want to use a little bit more frequently. All right, guys, so that is it. Have a great weekend, and I'll see you back. Next video will be, should be in the year 2019. Plenty of webinars to do to kind of, answer your questions and so forth. So, guys, have a great weekend, and see you on Monday.